Tomorrow morning has the potential to be massive for the markets. This is a big reason why recently your technology stocks have actually been falling. Fed Jerome Powell will give us a speech alongside other central bank leaders, and what he says could upset what the markets are currently pricing in. There is a risk for specifically big, large tech companies, in which Tesla, Apple, Google, Amazon, Nvidia, these names all qualify. Not to mention, you are about to see aggressive portfolio rebalancing that could be up to $150 billion. Ladies and gentlemen, we need to get into all of this information. Hit the like button and subscribe to the channel. Help push this video out to as many people as possible that ultimately need to hear this information. So Fed Jerome Powell is going to be speaking tomorrow as soon as the markets open for about 2 hours. Now, it's going to be a conference with three other central bank leaders. The ECB Fed President, Christine Lagarde. You're going to have the UK Fed, as well as the Japanese Fed. And this is a conference hosted by Sarah Eisman. This is something that I think most of you guys are familiar with. Now, markets are currently expecting only one more rate hike coming in July and then a pause until January. Then we're expecting rate cuts. As you can see from the Fed Rate Monitor tool, there is an 81.8% chance of another rate hike in July. And then for September, there's a 70% chance the Fed holds, 15% chance the Fed hikes, and a 15% chance the Fed cuts. For November, there's a 62% chance that the Fed does hold, and a 23% chance the Fed hikes, a 12% chance that the Fed cuts rates. In December, a 53% chance of a hold, a 23% chance of a cut, and a 19% chance of a rate hike. For January, that's where expectations start to get a little closer. 36.9% of investors are expecting the Fed to hold, and 37.6% of investors expect the Fed to cut rates. So you are pricing in a rate cut for January 31st, 2024. By this time, inflation on a core basis still likely to be in the 4% range. And even headline inflation is likely to be in the 3 ranges, over 3.5%. So why is Fed Jerome Powell's speech tomorrow so important, and what do I think is going to happen to our markets? Well, like I previously mentioned, you're going to get the head of the UK Central Bank, the European Central Bank, as well as the Japanese Central Bank, and then obviously Fed Jerome Powell. The UK recently has experienced elevated core inflation, and core inflation was trending down for a while. And now it's hitting a new high, recently coming in at almost 9%, or 7.1%. The headline is almost 9%, sitting at 8.7%. This is a problem, and there's going to be some very hawkish things said from the UK Fed. If Fed Jerome Powell reiterates some of what she says, it could be a negative thing for our markets. Again, consider the summary of economic projections came out last week, and the markets really didn't, maybe that was a week before. The markets really didn't care. The markets didn't price too much in. The Fed said they're going to have to raise rates twice and hold them there for a majority of 2024. What the markets do, they price in one more rate hike and rate cuts as soon as the first month of 2024. Inflation's likely to remain higher for longer. That's what the summary of economic projection said, yet the markets still don't want to unprice these rate cuts for January of 2024. Fed Jerome Powell might force them to unprice these rate cuts. Not to mention, if Fed Jerome Powell does not like where the markets are at, if he thinks that is contributing to inflation, he is going to try to make the markets fall. The summary of economic projections 2 weeks ago was very hawkish. Fed Jerome Powell was quite dovish in his speech. If he did not mean to be so dovish, he's going to say some things the markets don't like. But the biggest threat this week, in conjunction with Fed Jerome Powell and these other central bankers tomorrow, is portfolio rebalancing. Now, ever since the banking crisis in March, this is when big tech stocks started to lead the market in a different way than they had prior. Big tech names have been the sole reason why the markets have moved higher. A lot of your normal stocks, average stocks, quality stocks have not performed to the way that big tech has. And that's because the banking crisis changed the narrative that growth at any cost is okay. But differently than growth, it's stable growth. It's your Microsofts, it's your Apples, it's your companies that have been around a long time, that don't need to raise capital, that have no issues of bankruptcy, like literally forever, for a long time. Your big tech names. That has been why big tech has been outperforming. Big tech has been seen as a safety trade. Now, believe it or not, if Fed Jerome Powell is dovish and not as hawkish as expectations, you might see a broadening out of this market, and you could see some money taken out of big tech and put into some of the stocks that have been underperforming this year if Fed Jerome Powell has bullish things to say, which could lead the indexes to fall, but it could lead to individual sectors and stocks doing well. A lot of your small and mid-cap stocks might actually benefit more than your big tech from a dovish Fed Jerome Powell. And then stocks such as Tesla, I think, could also be beneficiaries of this because they are not seen as that safety trade. They're seen more as a higher growth kind of trade. Now, according to J.P. Morgan and their strategist earlier in the month of June, they estimated that rebalancing of portfolios could total $150 billion worth of equity selling and a similar amount of bond buying, factors that might already be affecting our markets. Now, portfolio rebalancing happens kind of like how Cathie Wood sold Tesla. It's because Tesla got to a larger percentage of her portfolio than she wanted it to be. And usually that number is around 10%. Well, what are the stocks that have really done well in the past 6 months or so, 3 months or so? It's your big tech names. So there could be a lot of selling of big tech, again, which could affect the indexes and could cause the indexes to fall. But your other stocks that are quality stocks, your small and mid-cap names, could actually outperform as some of that money might start to flow to those areas of the markets as well as to the bond market. Now, Tesla stock in particular, I think, is at a very interesting level because Tesla recently has rallied and it's really been justified due to some of the partnerships and the fundamentals that we have seen. And not to mention, Tesla is actually twice as cheap as Microsoft on a PEG ratio basis. So you're actually buying Tesla for a lot cheaper than a lot of your big tech names, and there could be a lot more upside if the economy does perform better than expectations, which essentially would be the bet that people would be making if they bought small and mid-cap companies. Not to mention, Tesla's recent technicals were overbought and now they're back reset. So this could give the stock room to make an upside move if Fed Jerome Powell is more bullish than what we expect. And markets have been selling off recently because we're expecting a hawkish Fed Jerome Powell. Now, at the same time, Tesla is going to have its major catalyst on Sunday, July 2nd, and that's going to be delivery numbers. Another reason why some hedge funds and institutions might opt to buy Tesla at its current level. So I think this is really going to be an event for individual stocks heavily compared to the indexes. I think the indexes could fall off of a dovish Fed Jerome Powell or at least not perform to the same extent as some of your small mid-cap stocks or stocks such as Tesla with improving fundamentals and catalyst to drive them higher. So the markets are very fearful of what Fed Jerome Powell could say tomorrow morning, and this is a big reason why stocks have fallen recently on an index basis. Now, me personally, I think portfolio rebalancing is going to be the big catalyst in conjunction with the Fed. And that's basically the message that we have sent throughout this whole entire video. And I think specifically for stocks with high PEG ratios, meaning super expensive companies like a Microsoft, like an Apple, that are not growing as much as something such as Tesla, they could be the ones to get a little bit more profit taking from hedge funds and institutions this week as we do wrap up the end of this week and you see more portfolio rebalancing, whereas stocks such as Tesla that are trading very cheaply on a PEG ratio basis, PEG ratio being the PE divided by the growth rate, you could see a boost to stocks such as those if Fed Jerome Powell does kind of give us what I expect, and that's really nothing to be overly hawkish about. We're probably not going to get new information. So long story short, some of your big tech names that are trading at elevated valuations, Microsoft, Apple as just easy examples, they could be the ones to actually fall this week, whereas something such as a Nvidia or a Tesla, which are trading cheaply on PEG ratios, could be ones to actually benefit the most, and some of your quality small and mid-cap stocks might actually do well also. There's a lot of fear out there. Don't get caught up in it. Anything can happen. I am not a financial advisor. I am not a financial planner. I am just a guy that is overly bullish on Tesla stock. So that is it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.